go. So we're going to look at cash flow, how it affects your business, and why it's so important to have, you know, an overview. And this program is possible through the help of the Orange County Chamber of Commerce, obviously, and the Small Business Administration, which funds our program nationwide. The Small Business Development Center nationwide, we have chapters in every state. And in New York, the State University of New York is basically our host institution. We have about 23 or 24 centers throughout the state, and we represent the Mid-Hudson. So I'll give you my, this is contact information if you want it. It's the New York Small Business Development Center website. It's nysbdc.org. We offer no cost business counseling to new and existing businesses. And we have access to librarians up in Albany that can answer questions for you. We have access to, if you want to do procurement, business with the government, we can help you with that as well. And all this is no cost to you. So I'm going to share now this spreadsheet that I'm going to populate with you so you see a little bit how it's done. For an existing business, you'll want to have really good bookkeeping. If you cannot get monthly reports, try to see with your bookkeeper if you can have, if that's something that you can create so that you can do, I'm sorry, I wanted to make sure you're recording, so that you can do this exercise monthly or at least quarterly. If you don't have good bookkeeping, it's going to be really hard. So you should, a profit and loss statement is going to look a little bit like this spreadsheet that I'm going to populate now. And one of the reasons I'm creating this is for you to see how you can create your own projection. So if you have, like in this example is a seasonal business. If you have a seasonal business, it's really important to monitor your cash flow. If you're going through expansion, it's also important, or contraction. So it's basically your thermometer on how well the business is going. A lot of people think cash flow is how much money there is in the bank account. And to a certain extent, it is true, but to another extent, it's really going forward into like a year's worth of projections to see what can you possibly anticipate in funding needs or in payroll, labor needs to support you with your growth or with your ups and downs. So I'm going to start with populating the income category here. This would be something you would benchmark if you're an existing business. Okay, so if as an existing business, I know that, for example, in this landscaping example, I do design, I do maintenance, installations, and I sell plants when I do installations. So my design fee is $300. I just made that up. I'm not exactly sure how much these are. And then we're going to create a customer estimate of how many customers you would be serving per month. All right, so we're going to start with January. And usually most of the design work is done in the winter when they're not in the field working. That's when they have time to do design work. And that's when landscapers, not landscapers, but homeowners and contractors who know that they have to do some landscaping to new homes and all that will contact these companies to make sure that they can get some things done. So I'm going to assume that they're doing about 15 of these in January, and then about the same in February and March, so that and maybe April, and then maybe less in May and June and thereafter. And very unlikely that there will be a lot of design done in the winter. So I'm just leaving a placeholder here. So maintenance is cleaning up the leaves, cutting branches, cleaning up the plants that are dead or dormant. So we have obviously nothing usually until May, April, May. So April, depending on the winter, it may start. And this company has a roster of about 100 customers. So I'm going to assume that they have at least 30 to call, and then they start doing really installations in June. So we're not going to be doing a lot of cleaning, and then it starts again in October. Where not all people need cleaning and maintenance. So this is just a placeholder. So then installations, again, they are seasonal. So usually it runs from June through October. Very unlikely, and not even that much in October. So in June, that's when they may have 40 new installs. And actually, maintenance is year-round. I'm just remembering because they have to go and water plants and clean up and all that. So this actually might be a different number. So it might be 30 throughout the summer. And then, so these are customers they see every month. So installations, they're going to have their peak. And then during the June to September months. And then the plants, basically, they're going to mimic the installations because they bring their own plants. All right. So when I look here, this has populated because I have already done that ahead of time, but it basically gives you an average of how much they made. Depending on your type of business, you may or may not have cost of goods. In this model, they do because they sell plants. They also have to buy plants, right? They don't keep inventory though. So it's not like they have a nursery and that's where they get their plants. So basically if you hold inventory, you'll have to replace your inventory, right? So this will be your direct cost of conducting business, but you'll also carry inventory in addition to that. So now I would just want to show you these categories will already have been populating through your bookkeeper, but I want to review them because not everyone has an understanding of these operating costs that everyone, we all have the little different operating costs, but not everyone has good clarity. I like to put owner compensation up there because a lot of, especially solopreneurs or small, small businesses that only have an owner or two or one employee, they pay themselves with what's left. And really, you should be the first person here so you can take care of your needs. And I'll explain this in a very short, with a very short sentence. It's basically, if you ever need funding, the lenders will want to know that you're taking care of yourself, that you can take care of your own personal bills before, with the business. Okay, so that's why it's important that you put it here. It's not a break even or cash flow analysis unless you are included in here. Okay, that's why I put it at the top. So you'll have, this company has an accountant that does their year-end taxes. So it's about $1,200 for the year, but I'm putting it as a placeholder in the budget monthly. It's something you should think about doing with all of your relatively large expenses. Is to squirrel away $100 a month in a savings account until the big bill arrives, is the better way to manage your cash flow. So, you want to think in those terms. So advertising, marketing, they do a lot of advertising. I mean, relatively more than others because they are targeting new homeowners and want to remind their former clients that they're there and exist. If you pay more than $5 or $10 a month in bank charge, really think about, again, that may be because of cash flow issues where you have no sufficient fund check balance and or you tap into a line of credit and whatnot. So this is a line item you want to keep an eye on, and this is not as different from your merchant account. That's a different category. So so just keep an eye on that. Do what you do best, delegate the rest, get someone to do your bookkeeping, because what's worse than no bookkeeping is bad bookkeeping. I have a client who's an architect and who thought they were getting good bookkeeping. They finally got a professional bookkeeper, and they were not getting good bookkeeping. So things were in wrong buckets, and it was very complicated to straighten that out. So again, get a good bookkeeper. So they have one, and that person does a good job. And whether they're busy or not, I'm putting a placeholder, a monthly placeholder. This is the reminder to get health insurance. And now, especially now with all the programs that are out there, it's affordable internet. If you have a home-based business, it is as a percentage of your use. So if it's you, your spouse and the business, that's, you divide whatever fee you pay per month by 3. So that's how the IRS lets you take. But they have an office, so they pay internet and phone and on the same account. Insurances, you need business liability insurance. It doesn't matter what you do, you really need to protect yourself from business liability insurance, with business liability insurance. A lot of folks think that an LLC protects them, but really that just creates one extra layer of separation between your personal assets and the business, but that doesn't mean you are protected in the event of a lawsuit. So they have a business liability insurance of about $2,400 a year. They lease equipment per job, so that would probably go into cost of goods. So I'm going to skip this. They don't really have meals and entertainment. And if, just remember, meals and entertainment is a shrinking tax write-off. So talk to your accountant before you start putting a lot of meals and whatever in your, as a business expense. Membership fee, that's your chamber fee and any other professional associations you might be part of. Office supplies, an ink cartridge here and there and another, you want to put something in there. Payroll, I'll get back to that. Postage minimal, but we do still mail things. And professional fees, that might be an attorney, that might be a consultant that you hire here and there. And if you have an office that you own, you would have property taxes, but if you rent, then you would have a monthly rent. And in this instance, for this example, they do rent. Repairs and maintenance on the property, that depends on your lease, could be also on your equipment. Snow plowing and landscaping, again, that depends on your lease. Subscriptions to, or books, anything that relates to professional development would be here. And they tend to read a lot and buy all kinds of magazines. So that's an expense. And then we have supplies, and supplies are not the supplies you use for your business. For example, in your salon, this is not where you would put supplies, because the supplies you use are for, with your clients usually. This would be, in another category, which I will review with you. So this is more like cleaning supplies, PPEs, toilet paper, things like that, okay? Again, telephone, we have that already. Trainings, that would be professional development, conferences. Today's meeting counts as training, and you can put that in there. Trade show, you can go as a visitor or as an exhibitor. And everything's on hold right now, but when things resume, you have a choice to be one or the other. And depending on your industry, you may be an exhibitor, but before you choose your trade show, I always recommend that you find time to be a visitor. So yes, you miss a year, not the end of the world. You go there as a visitor, you take business cards that are of like-minded exhibitors to you, could be competitors or could be like in the same category as you. And you put this in a folder, and then 3 months later you reach out to them, and you reach out to them, wanting more about their services and whatnot, but to check in to see how was that trade show. And for some, that's where they do all their business for the year, and especially if you're a wholesaler. And for others, it might just be like, no, didn't do anything. So for example, in your industry, I don't know if you would go to, if you work with brides and whatnot, but if you would go to a wedding show, before you would book as an exhibitor, I would really encourage you go as a visitor, get other beauty salons cards, and then ask them later, like, how was that for you? A little investigation goes a long way because these are very, very expensive. Okay, so travel, here we have travel or truck expense. In their line of work, they have a truck expense because they have 3 trucks and they're on the road a lot. But most people use a travel allowance, which is basically you keep track of your miles, and miles are from the IRS. It's counted from your place of business to your client, from the place of business to the bank and back, from the place of business to, you know, Office Depot or whatever and back. It's not from your home to the place of business. That's going to work, and that's not an allowance. It's from the place of business and conducting business in your car with it. So you keep a log. At the end of the year, you give that to your accountant or bookkeeper, and then they make the adjustments. But here they have a truck expenses because they have like 3 trucks and they have payments and maintenance and all that. It really adds up. And then during the peak here, it really, because of the gas and all that, it really adds up. So it actually just looks a little low, but you know, anyways, utilities, you know, everything from propane to electricity to oil and all that, water, sewer, garbage, it depends where you're at. And then of course your website. So most of anyone's expenses in a business are in here. If you have your own set of categories, did I miss anything, Denise and Elisa? Are there any other expenses that you guys encountered that have not been looked up here at all?
As far as expensive, I think would like events, like when we host events and stuff like that, that would be where exactly would we put that?
So if you have an event that is that an income generating event, or is that a promotional event?
More like a promotional event.
I would put that in marketing.
Okay, we'll put it all in marketing. All right.
Because it's part of your marketing. You know, you're trying to bring people in, but that costs. It might be food, it might be free products, it might be
right.
So that would be part of your marketing expense.
Okay.
That's where I would put it. Any other questions? Okay, so just to finish up here, payroll, we have 1 designer, and that person gets the same amount no matter what. That's what she gets per month. And we have maintenance is based per work. So just for simplicity, I'm just going to assume that half of the fee that is charged pays for maintenance. That would be a good way to calculate this. And then installations, same thing. So I'll assume that half of the fee for installation goes towards labor. And let me just see if that makes any sense. And now it's in payroll, and it's about 80,000. Okay, it's a little low, but for the exercise, we're going to see how that works. So now when everything is said and done, the whole reason I wanted to do this is to show you this one line. Okay, and this line, unfortunately, never comes with your profit and loss report from QuickBooks. They stop here. They have this line, the monthly cash flow, but they don't have the cumulative cash flow. So I always encourage you to get a report in Excel, not in PDF, in Excel, and then you add this one extra line so that you can keep track of your monthly cash flow. So it's basically this, the formula for this one is basically your cash flow of the month before plus the new one, and so on and so forth. And as if you can see, they're a little bit in the negative here because these are slow months. Even though we do have some income, they're slow months. So without doing a big math here, you could see that they need at least 3,000 in their bank account to start the month. The January 1st, they need 3,000 in their bank account to make this work. So actually it's a little more than that. So because yeah, when we're in the negative, we don't pay those taxes. Okay. So actually here it's more like 3,500. So if you see at the end of the year, they managed to pay all their expenses, pay all their people, and they made an extra 22,000 for the year. So that would go into their bank account from January 1st. So assuming that this is not year one, I'm just going to take that off. And they started with, let's say 18,000 from the previous year, this is what their cash flow is going to look like. So now they have money in the bank to float. And the reason why it's important is because they have to pay bills, right? Before they start making money, which is, really June, July, August, September. These are their big months. Before that, they're losing some money. So this is not, uncommon. So that's why I wanted to take this example of a landscaping business as an extreme bell-shaped income, so to speak. So, this is the valley, right? You're losing money, and then all of a sudden they make money and they can put money in the bank account. But if you're a startup and you don't have this money and you have to buy equipment and you need working capital to get you to that place when you start making money, and by the way, it would be a lot slower because you would not start with an existing client base. Like they have an existent client base, then you wouldn't start with that. So it's super important to understand your financial need from day one. Now, if you have an existing business, and last year, the reason why I'm giving this presentation is because last year was really, really hard. I don't think there was any industry that was spared. So for months, there were, from March through June, a lot of business of 2020, a lot of businesses were closed and received very little support during that time, because by the time the programs got active and by the time people had access to them and were able to tap into those programs, they had to, either not pay their suppliers and rent or tap into their resources, both business and personal, to keep up. So that affected tremendously their cash flow. And I have to be honest, those who survived last year had a handle on how to manage their cash flow, meaning that they planned ahead. They knew they were, in some businesses, expenses are, look at this. This is a small business that has, 22,000, probably more than that in monthly expenses. If you have a larger business with even more people, it can be 50, 60, 100,000. It's a lot of money that you have to come up with to keep things afloat until they were able to open again, which was, mostly, July, August. Some companies started to reopen, 50% or with blended home work and office work. In either case, this was a very difficult line to manage last year. So some people got, loan, so that loan, here. Someone has, can you please unmute? Okay, mute. Okay, there you go. So in terms of your business, what you want is you want to know where you're heading. So that's why I wanted to show you projections, and projections don't have to be made up. They can be based on last year, not last year, but previous years of monthly like this reports. So you can see as a percentage how much you've made in January, February, March through December, and sort of mimic in this projection the same kind of scenario. Expenses usually don't change that much. I mean, they go high, they rarely go back low, so you can assume a little increase. But at the end of the day, this is the reason you want to do this, especially planning ahead, is with the understanding that things may contract or expand. You can go through an expansion, for example, and need to hire people. So to support your expansion, especially if you're doing a lot of hands-on, like in the salon, you don't have income unless you have a person there, because it's one-on-one pretty much. So if you look at the trajectory of the last 3-4 years, and you see it looks like we're growing at 3% per year or 5% per year, and now you're going to do a push with marketing because you want to bring old clients back and secure new ones, you have to make sure you have the right labor there, because otherwise, what good is it for you to have 10 calls for a service you can't provide? So this is where you can make these kind of strategic decisions. And also, if you do hire someone, you need to figure out, well, how many of the new clients do I need to secure to be able to support this person's, salary and such. So there's a lot, really a lot of storytelling basically that can be made out of doing projections. And the first time it's really daunting because you're just like, how am I supposed to do this? So this is where reaching out to your accountant or your business advisor helps figure out what, how you can do this and basically do it well. So, now I'd really would like to have a little conversation for those who've paid attention and we're here listening, so that I have some here available for you. So if you have any questions, I'm available. You can unmute yourself or raise your hand or write it in the chat, whatever you prefer. Denise, Elisa, and I don't know who's the other third person who joined.
Hi, this is Denise. I really don't have any questions. I think it was very informational, and definitely learned a lot today.
I'm glad. I know it's a lot. I know numbers are dry, and I get it. Not everyone's a number person, and definitely not a spreadsheet person. I understand that. Most people start a business because they're good at their trade, right? They start because they're great stylists or whatever. They're great carpenters, but that part of the business is usually left, to the accountant once a year. You look at your taxes, you trust the accountant did the right thing, but nobody, not a lot of people really understand that these numbers tell a story, and most importantly, can help you make decisions with your business, in good times or in difficult times. And particularly important in difficult times. I mean, good times, we can always roll up our sleeves and work more, but in difficult times when things contract, like last year, I mean, it was really survival of the fittest, and those who had an understanding of their numbers were the ones who had the highest chance of survival. So we're just hoping we never have to go through this again. But the God honest truth is, I've been an advisor for 20 years. I've seen 9/11, how it affected a lot of businesses that we're doing in New York. And I was there, through 2008 when there was a crash that affected a lot of businesses. And then Iron Lee and Sandy, when we had the floods, that affected a whole other bunch of businesses. And then this. So, when there's going to be something, it's just a matter of time. It's just a matter of like, what is it going to be next? So you want to be prepared and you want to be ready. And one of the things is, educating yourself in that sense. So, so Hannah, do you have any questions? See that you, or Elisa?
Hannah, you need to unmute.
Unmute yourself, Hannah.
Hi, Myriam. Hi, everyone.
Hi.
Myriam, I'm interested in getting a grant. Are they available for women-owned businesses like mine?
So this is the greatest urban legend. And honestly, I was guilty. Before I was an advisor, I had a business 10 years prior to that. And I called my local SBDC center and I said, I need a grant. I'm a woman-owned business. And they were like, there is no grant. And I was like, what do you mean there's no grant? Everybody says there are grants for women and minority. And well, it's an urban legend because there are no grants. I'm saying caveat, a little asterisk. I've seen, I think 2 grant programs that were made by some wealthy entrepreneurs that wanted to help women and minority, but it's so competitive. For the one grant they have of 500 or 5,000, which is really not that much. They may get like tens of thousands of requests. So, the odds of you getting it are really, really small. Grants by law are given to not-for-profit. Foundations have to give it to a not-for-profit organization, which, some businesses who cater to minorities, or, you know, may have programming specific to an at-risk, let's say at-risk youth or things like that, even though they are for profit, might be able to get a fiscal sponsor that is a not-for-profit, that would basically handle the grant for them and then give them a percentage. But that's really hard to get, both a fiscal sponsor and then to apply for a grant where the foundation would trust that as a for-profit, you would do the right thing with their money, and trust that the fiscal sponsor would be responsible enough to make sure they oversee your work so that they're handling, your money, basically, their money well. So it's really, that's really an exception. And I'm not saying it never happens, but it's really, really rare. So the grants that are available right now are not targeting women or minority. They're for those who have suffered during the pandemic.
Mhm.
New York State has a grant. Some counties have a grant. I know you guys are in Orange County, and
Right.
I don't know of any grant there. It may come. I know Dutchess has some and Ulster has some, so who knows about Orange. But the one in Ulster, I know for a fact that started today, is you have to spend the money first and then you get your grant.
Mhm.
I don't know how long it would take to get the grant. So that's a lot. It's asking a lot from small businesses that need money to put it up front, and
Mhm.
it's from 5 to 35,000. So, it's just, it's there, but it's more complicated than just getting money, so to speak.
Right. And excuse me, what is the name of this grant that came out?
The one that came out from New York.
Yeah, today something
That's
came out.
from Ulster County, so it would
Oh, okay.
apply for that.
Oh.
Yeah.
Okay.
New York State, Empire State Development has a grant program. You need to apply, and you can see on their website whether or not you qualify. And then if you do qualify, you just fill out the application basically, and then, you'll hear back at some point. But it's based on income, and they, and how the pandemic affected your gross income. It's basically the measurement that they use.
Right, right. I mean, I'd like to schedule a meeting with you. I did fill that intake out.
Yes,
So-
Kathy, Cynthia is your advisor, so you should hear from her really soon.
Okay, great, great. Thank you so much, Miriam.
That's your area, so.
Thank you, Myriam. Thank you.
You're welcome. So, there's no magic to doing cash flow projections. It's hard work, but if you have a bookkeeping system and you can get a report, you can use, especially as an existing business, you can use historical data, and that can go a really long way. You can notice that, for example, in January, things really dropped like by 50%, which means, well, maybe that's a good time for you guys to close for a week and do a deep clean and take a vacation and whatever. But you won't know this unless you really look at it. And like I said, these numbers tell a story so that you can plan ahead and you can better prepare how to man your office or whatever. So even you, Joanna, do you have any questions that you know the business world?
Yeah. I'm wondering, we're talking about managing cash flow during uncertain times with your existing business. How would you suggest somebody plan for this anticipation when they're deciding whether or not to open their own business? They don't have that backgrounds to, fill in the numbers. How do you guide somebody through that?
So for a new business that would need to plan, which is the first thing I do with every client, to be honest. Anybody that sees me, I don't care if they don't even have an idea for a business, we still create a scenario so that they can see how it works. And some are very simple, some are more complicated, but at the end of the day, it's about research. So, I put a lot of placeholders today just to go fast, but the reality is the client would, if you are interested in starting a business and you're not sure, what the rent is going to be. Well, my question to you is, how many square feet do you need? Do you think you might need, and where do you want to be located? And then you can look in that location to see what the rent goes for about that size office, for example, or warehouse or whatever. And we can't predict the future in 6 or 12 months from now what it's going to look like, but at least it gives us something to work with. So we're throwing spaghetti on the wall and seeing what sticks, but we're also doing it with as much data as we can possibly, so that it's not completely made up. I like to go high in the expenses. So if somebody thinks that it's going to be, $2,500 in rent, I say, well, how about we put $2,800 or $3,000 just to be on the safe side. And then for the income, I like to go conservative to see where is that break-even point. And the break-even point is basically, how many muffins and bagels do I need to sell to make this work, to support both myself and my employees, if I have any, and the rent and the insurance and everything else that goes with it. So a lot of people don't even know it's their break-even point. I mean, they know intuitively because they've, if you've been in business for a while, you sort of know what a good month looks like and how much money you need in your bank account. But there's a little bit more to it, and there's a bit of a science to it, so that you don't have to be so there's a lot of anxiety that surrounds money when you're an entrepreneur. I mean, it's all about, what you love to do and why you're doing it and the purpose behind it. But it's also about, meeting ends and doing more than just meeting ends. So it's very important to have a feeling for what is it that you need to make your business work, and to more than just survive, but also thrive. So you know what you need. Most people know what they need to survive, not all, but most. But it's good to see, like, where do you want to be in 5 years, and where, do you want your employees to slowly take over the business so that you can retire in 15 years, which, employee ownership is one way to have a business continuation. You work so hard for your business that it's important to have plans for, what's going to happen when you want to retire or you want to get out of it. And there are some very successful small businesses in the Hudson Valley that have been doing this like from generation to generation. And I'm not talking like family generation, but there's like a life cycle of the ownership for 20, 25 years. And then a new owner takes over in that transition period, gets trained, gets all the education they need to take over successfully, and then the owner slowly goes out of or just sells whatever's part is left. But exit strategies are really important. If you don't plan ahead, you can't do it. I mean, there's a lot of people who right now want to plan their exit strategy, but they want to do it like next month, and it just doesn't work that way. It's not that quick. So having an understanding of your numbers makes you more apt to be able to plan your exit strategy accordingly. So there's a lot of, so much in the numbers that can help you with not only managing your day to day, but also, what do you want to do next year or 5 years or 20 years from now? So there's a lot in the numbers. So where to start? Make sure you have great bookkeeping, good bookkeeping, good accountant, and don't do it alone. Get an advisor. No, our service is free of charge, prepaid, buy your taxes because it's government funding. And basically we're we're all professionals, and that's what we do. We help small businesses do that, like understand what's their next best step. So there's no magic to it. It's work, but it's definitely worth it.
Absolutely. I mean, I'm just viewing what you shared with us today of, some things that seem like common sense, but when you are trying to figure out the many facets it takes to build a business, there's some things that you can easily forget. So it's good to see that visually right in front of you. And then can you just share how anyone would be in touch with you directly or with, an advisor from
Yes.
SB?
Absolutely. So the best thing to do is you go to our website, and there's a form that you can fill out that will then go directly in our system, and we'll be alerted that you want services. And then one of our advisors will reach out to you. And basically right now we're meeting virtually, phone and Zoom. So, you know, and we have right now 4 or 5 advisors that can help you. So that's the best route to take.
Wow. Okay. And you said your services are free?
No cost.
Wow, that's wonderful. You know, we frequently get the phone calls at the chamber, you know, how do I start my business? And we just send them right over to your website to make sure that they can get the best guidance that they personally can. And as soon as they get started, then we talk to them about membership too. So, are there any other questions or anything else that you wanted to add, Myriam?
Well, I have to ask a favor. You'll get an email from me a little later with a survey. It really takes a minute, but the Small Business Administration, the SBA that funds our program, they sort of like to know that, you know, we're real, that this happened, and your feedback is also very helpful. So if you can please take a second to fill it out, that'd be great. And then you'll also have my contact info if you need anything.
Absolutely. And Hannah, if there's anything that, you know, I know you missed a little bit at the beginning, we'll get this recording onto our YouTube channel so you can view it. Okay.
No problem. Miriam, I just want to ask you a question.